Okay, break-even point. What is it? Break-even point is where NOI is equal to zero, so this is our net operating income right here. When that is equal to zero, or where the total contribution margin is equal to our fixed costs. So I cooked up an example for this right here. So this is the projected profit for a company, or just a theoretical company for the coming year. So I set up this CM income statement here where we have sales of 300,000, our variable costs 180,000, our fixed costs 108,000, and there's all these missing blanks. So we're going to figure out how to get the break-even point in units and dollars from this CM income statement here. So the first thing that we'll need to do is obviously get our total contribution margin. So we just have obviously 300,000 minus 180,000, and that works out to 120. And then from there, in order to get our net operating income, we take our total contribution margin and take out our fixed costs. So 120,000 minus that 108,000 comes out to 12,000. And so we filled out this side of the CM income statement. And so now we want to get it in a per unit basis so that we can calculate the break-even point a little bit easier. So per unit, we see that our variable cost is $18. So if we can just take that 18 and divide it into that 180,000, 180 divided by that 18. So this is per unit, and this is dollars. So what we get from that is that we sold 10,000 units. So we get 10,000 as a total unit sale. So then we can figure out how much we sold each unit for by dividing the sales by that 10,000 units. So I won't bother going into quite the depth because you can just see right here it's going to equal $30 per unit, right? So that's how much we're selling each unit for. So 30. And so now we can get our contribution margin the same way, our contribution margin per unit the same way that we got the variable costs, or the contribution margin total. And we just take that, take that by taking the sales minus the variable cost per unit, and that comes out 12. So we have a contribution margin of $12 per unit. And that's actually how we're going to be able to get our break-even point in both units and dollars. So in order to get it in units, break even in units, we take our fixed cost of 108,000 and we divide that by our contribution margin in units, or per unit. And so that would be 12. And what you get is 9,000. So in order for us to have zero net operating income, we would have to sell 9,000 units. So basically, in order for not have a loss, we're going to need to sell 9,000 units, or obviously more. But if we want to exactly not make any profit and not take any loss, then we'll have to sell exactly 9,000 units. Now, as far as getting it in dollars, let me erase some of the scratch work here. We're going to need our contribution margin ratio. And the way that we get that is we divide our contribution margin per unit over our sales per unit. So we have 12 over 30 here, and this is our sales per unit, and this is our contribution margin per unit. And we get 0.4 on that, so 0.4. So this is the amount of contribution we get from each sale. As far as in a ratio. So 40% of 30 would be 12. And so the way that we use that in order to get dollars, let's move this over here. Let's say dollars. And let's just label this while right here. So we have 108 again. You're always going to put your fixed costs on the top of your break-even equations, and we put our ratio of 0.4 on the bottom, And that's how we get $270,000. And so this is how many units we'd have to sell in order to get achieve our break-even point, and this is how many dollars of sales we'd have to achieve. So this right here is not our contribution margin we'd need to achieve. This would be our total sales goal we'd need to achieve right here. And that's how we would break even for each. And if you want to find so for example, you might be asked how many units must be sold in order to get a profit of, let's say, $30,000. It's easy because you just add on. So we'll just do it. So if we wanted to see, in order to have an NOI of $30,000, how do we be able to calculate that? Using the same exact equation, we would just take our original break-even equation with fixed costs over our contribution margin per unit if we want the units. And so these are our fixed costs, and we add the 30,000 that we're wanting to achieve on top of that 12. This is our CM, remember, in units. That was terrible. And that's how we get 11,500 units. So if we wanted to achieve $30,000 in NOI, obviously we'd still have to take taxes out of this and then we'd get our net income. But for our net operating income, if we wanted to achieve $30,000 of profit, then we would need to sell these 11,500 units. So really a helpful way to think about it is when you're doing the break-even equation to just break even, imagine you're just adding a 0 on the end of it. So we have our fixed costs of 108, and then you're adding 0 if you want to break even, but if you're looking to seek a certain number in profit, you'd add the target profit right here. So if I wanted to achieve maybe like, I don't know, just the same example of 30,000 in profit, then you would just add it right there over our contribution margin ratio because we want it in dollars, and you would get whatever that equals out to, and that would be your that would be in dollars. So yeah, that's about it as far as break-even point goes. So hope that helped.